Good evening, folks. So for this session, I will be just recording a very short video to run over today's trades and my psychology and thought process. As I mentioned in the previous one, I learned that I need to stick to the rules no matter what. I have to wait for the displacement no matter what, and I have to set my stop losses no matter what. So I'm still keeping a conscious thought of that and trying to maintain that, even though it's not the easiest thing. But this journey is teaching me that I really need to pay attention to that. So here we have the new week opening gap for this week, from Sunday's closing price to from Friday's closing price to Sunday's opening price. The difference is that is the new week opening gap. We can see we traded lower during the Asia session, which I just called Tokyo high and low, and the London session created what it did. We also got a new low during the London session, and we traded higher. At this point, we were now in New York session. When New York session hit, we officially can start looking for a protocol. And in this case, we're obviously looking for okay, this was a mistake here on my part. This is actually the high for London session. Sorry, right there. Just being precise with these things. So we got a sweeping liquidity on London's high and eventually Tokyo high. When we extend the high from Asia session, we can see that at that point we swept the buy side from Asia's high. And of course, at this point, this is when we start looking for the displacement to the downside. I highlighted my 730 TSO, the true opening for New York session. We traded and got a bit of displacement to the downside. At this point, I was waiting for a retracement to this order block. My attention was very focused on the order block right there, and I considered this to be my market structure shift, because even if I don't look at this low as my market structure shift, this 730 TSO confirmed it to be my market structure shift. Remembering the rule of power 3, a true opening is the opening price in this case, and then this was essentially a Judas swing to the opposite direction, and then we're supposed to get a displacement to the downside. Before this 730 opening price, we obviously had a choppy move, a choppy range, which I just realized I made another mistake. This is supposed to be the true opening price over there at this low. So before this move, we obviously got a choppy range, and then we had a Judas swing to the upside, and then finally displacement to the downside. This is the point you start looking for your CB, or as I said, the second entry being an order block. So I was vividly looking at this order block right there, the 9:20 a.m. New York time order block. The problem with this trade at this point was the fact that it wasn't yet equity open. At this point, it was 9:25, so the equity market was just about to open, but I still paid attention to it. So in the next candlestick, we got the displacement we needed. You see this 9:30 candle, we ran quickly to the order block and rejected aggressively from it. I was in profit from this trade, and my stop losses was not at this high. It was one handle higher than that to cover for spreads. So keep that in mind, that my stop loss was not at the high. I'm going to highlight the high right now with a thick blue line so it's visible. So my stop loss was not at this high. It was one handle higher than this, making it essentially about here on MetaTrader. So we continued, and we can see this high got tagged. At this point, my stop loss was not hit yet, but psychologically, I told myself to learn to take losses quickly. So at this point, I was sitting on minus $900, and I manually closed all the trades. I did not let it hit my stop loss, which was one handle higher, to cover for spreads. I exited the trades manually here, and watching to see what price does next pained me to be honest, because we got the true displacement we were looking for at 9:55 a.m. New York local time. So technically I could have held the trade that I had here, and I would have been tagged out because one of the major ones had a take profit at the new week opening gap low, because mentally, psychologically, I kept in mind that we closed on Friday and reopened at 9:30 a.m. at this point. So the space between this opening price and where we closed on Friday is an open range gap. So mentally, I had already set my first TPs from this level to close off at this level. So my take profits would have been smashed through easily, and I would have been looking for a confirmation entry because it was now entering the silver bullet hour. So I took the loss of almost $1,000, and I set a pending order for the fair value gap because I told myself when this candlestick closes, we have a CB. I'm going to enter at the entry of the CB, right? Stop loss being at the high. So this was a terrible risk reward because I was targeting London session low and midnight price, because this level here is the midnight opening price. So price, initially I had a 1 minute fair value gap, a 1 minute CB, which I should find now over here. So this is the 1 minute CB sitting right here. So from this low to this high, extending this candlestick to the right, this fair value gap. We can see that this was where I set the first pending order, right, on a 1 minute time chart. So what happened as I was monitoring the chart is I toggled back to the 5 minutes chart and told myself to enter instead on the entry of the 5 minutes instead. The problem with that is that we did get an entry inside of the 5 minutes CB, but I could have kept my premium price at this 1 minute one. As we can see in the shaded area, the pink shaded area is the 1 minute portion, but my entry was now set to here. And because of the spreads that I had at the time, my entry actually ended up being here somewhere. So this was already making my trade idea not the best at the time. It was already making everything a bit too unstable for me emotionally and psychologically. So my entry was now here at some point instead of here, where I should have left it, because I left a pending order there. Then I decided to manually enter on the entry of this. So I should learn to stick to the protocols no matter what. I know I've said this in the previous video, but this was the mistake that I made and did not wait for the pending order to be hit normally. And we can see later on how price plays out. We even broke above this entire CB and tapped into the smaller one above, which is also a breaker, a high, a low, a high, a high. This portion of price action to me is a breaker, where the other block is essentially this other block entry. So price, of course, price decided to meander around there for the entire AM session. We broke lower into my entry, and I have to also mention the fact that I decided to risk a lot more than I would have risked. So because we took a loss at this point, right? When I closed the trades manually here, I took a loss of about 1,000. So I was only left with $200 more to risk, but I ended up risking $2,000, $1,900 more on top of the $1,000 I've already taken as a loss, which was also another thing that I needed to essentially calm down with, because I was risking more than I was willing to actually risk. So price played around and we got back to the new week opening gap. I did not like the fact that we didn't close below the new week opening gap at this candlestick. Eventually we did get a close below it. This at this point was the only time I wanted to see the new week opening gap used as a resistance to push price lower, because here we could have well respected it and pushed higher. So we watched price do what it did, and I had to man it out and stick through it. But eventually we got a displacement to the lower portion at the end of lunchtime. As we can see, I highlighted that level as the lunchtime low, and we got a bit of displacement and pushed even lower after that. And at this point we purged lunchtime low. My target was obviously midnight price before London low. So I was tape reading, I monitored the CB, I monitored the order block, and I also paid close attention to this small inefficiency there from this candlestick high to this candlestick low. That fair value gap, that BC, was respected to push price higher as much as it did right now upon closure of the market. But I made sure to pay myself along the way. So as price was going down, as we got this displacement that purged the 955 low, I took some partials. As we broke again around this portion, and as we tapped into the BC, I took some more partials. So I was able to recover the amount of money that was basically lost for today, and it was not the smartest way to have done it, but it was what I ended up doing. So let's go to the TradingView platform to see the trades. As we can see, the ones that were left from last week, let me put a horizontal line to see the lowest one if we would have been in profit. So these were the ones triggered on Friday, right? And of course price traded, and this was the one I took at the order block. As we can see, that's the order block that I took the entry on. So I tagged in, I was in profit, and at that point you can clearly see that the stop loss would never have been hit if I left it be. Of course it would have been close, but it didn't get hit. So at that point I took the losses, the $800 losses collectively, and yeah, this was now the point I re-entered. As you can see, the spreads put me below the low. It's not even inside of the fair value gap at all. So this was when I entered 21 lots sell on SPX, and at this point I entered 0.1 for confirmation, because this should have been where my entry would be at the breaker bar, and I had to endure the whole thing until we eventually exited. This was the lunchtime low, and as you can see, the horizontal line that I drew from Friday. So at the very least, these trades should not have been a loss. This trade should not have been a loss if I did not close them all manually at this point. It would have held, and I would have been able to break even on the Friday positions, and I would have been profit for these positions right here at this point. And even later, of course, we purged that low. As we can see, all the partials that I took off as price was playing around the BC and giving signs of reversals. So that was the trade for the day. Going to the history of the platform, we can see I took losses from Friday, 100, 200, 100, 400. You can see the whole thing. and of course the ones that I took this evening, the losses that I took this evening, but got compensated by the risky entries that I took, 0.1 and 21, which collectively made $1,000 back. So I'm basically down by 1,088 so far. I know the video was longer than expected, and I just wanted to make sure that everything was covered. But before I round up, going back to the 1 hour chart, one of the main supporting confluences that allowed me to stay in the trade was this order block, right? We got a displacement, we got an order block testing a fair value gap, and now we're finally inside of the order block. And I told myself that if we break the high, the trade idea becomes invalidated. So in the London session, we had a purge in liquidity. I called it that was a turtle soup to go lower, and I labeled this a turtle soup also because during the New York opening at 8 a.m. we got another sweep in liquidity. I know I labeled this as a turtle soup, but it's more of a 3-drive pattern that ICT teaches: a high, a higher high, a third high before a purge in sell-side liquidity. So this was the main confluence inside of this order block. Instead of this bearish order block was the reason I was strongly supporting sell side to be swept, especially these lows by the end of the week. So I am going to be on standby. I'll have the same directional bias even for tomorrow, but with the way we have NFP this week, I will make sure to keep trading lightly and stick to the rules, stick to the protocols no matter what.